All right. So are you looking for some potentially undervalued tech stocks this month? Well, you've come to the right place.
Yeah.
We're diving into a recent Motley Fool article
Okay.
published just yesterday, November 9th, 2024.
Wow.
That highlights two companies they think are worth watching.
Interesting, because even though the S&P 500 has been on a tear since late 2022,
Yeah.
the Motley Fool argues there are still some hidden gems out there.
Exactly.
Yeah?
And the first company on their radar is Dell Technologies.
Okay.
Now, you probably know them for their PCs,
Right.
but there's a lot more to this company than meets the eye.
That's right. While Dell is certainly a big player in the PC market,
Yeah.
they're also a major force in the server market,
Okay.
which has been experiencing explosive growth recently.
And a lot of that growth is being fueled by one thing.
AI.
AI.
Absolutely.
Yeah.
The demand for AI servers is through the roof.
Real.
In fact, Dell's infrastructure solutions,
Okay,
which
what's that?
include servers and networking, saw an 80% jump in revenue in their second quarter of fiscal 2025.
Wow, 80%.
Yeah.
That's a serious surge.
It is, and this surge is clearly reflected in their earnings,
Okay.
which soared 86% year over year
Uh-huh.
in that same quarter.
Wow.
Dell is projecting a 10% compound annual earnings growth rate through fiscal 2028.
Okay, so Dell is seeing some serious growth, but is the stock actually undervalued?
Well, their forward PE ratio is currently sitting at 17,
Okay.
which is quite a bit lower than the S&P 500 average of 22.
So that does suggest there's some room for the stock to climb.
Potentially, yeah.
And here's where it gets really interesting.
Okay.
Statista predicts that the global market for AI servers is going to grow tenfold over the next decade.
That's right.
Wow.
And that raises a critical question.
What's that?
Could Dell's growth estimates be too conservative? They're already seeing massive demand.
Right.
And if that demand explodes even faster than predicted...
It could mean their current valuation is a steal.
Exactly. Of course, Dell isn't the only player in this space.
Right.
They're facing some stiff competition from companies like Hewlett-Packard Enterprise and Lenovo.
Right. So even with the AI server market booming,
Yeah,
Dell needs to have a solid strategy to grab market share.
exactly.
Okay.
And another thing to consider,
Yeah.
what happens if the global semiconductor shortage flares up again?
Oh, right.
Any disruption to the supply chain could really affect Dell's ability to manufacture and deliver their products.
Okay, so Dell is looking pretty interesting,
Yeah,
but they're not without their risks.
right.
Let's shift gears now and talk about the second company, the Motley Fool highlighted,
Okay.
Logitech International.
Logitech is best known for their computer peripherals, mice, keyboards, you name it.
Yeah.
But they're also making a strategic move into the enterprise market,
Okay.
which could be a game changer.
And it seems like they're already starting to turn things around.
Yeah.
In their second quarter of fiscal 2025, they saw a 6% year-over-year sales growth, with market share gains in several key product categories.
That's particularly noteworthy because it follows an 8% decline in the year-ago quarter,
Oh.
suggesting a potential rebound for the company.
So what's driving this growth? Is it just the enterprise push?
Well, that's certainly a big part of it.
Okay.
They're also targeting growth in other sectors like retail, healthcare, and education.
Right.
But perhaps their most interesting opportunity lies in the video conferencing market.
Okay.
Less than 20% of global conference rooms are currently equipped with video.
That's a huge potential market for Logitech,
Right.
especially with the rise of remote work and hybrid offices.
Yeah.
It seems like every meeting these days involves at least a few people dialing in remotely.
Absolutely. And let's not forget about the PC market itself.
Sure.
It's expected to have a very strong 2025, fueled in part by the release of AI-enabled devices.
And every new PC needs peripherals, right?
Exactly.
Mice, keyboards, webcams.
Yep.
That's all good news for Logitech.
Precisely. Analysts are projecting annual earnings growth of 8% for Logitech over the next 5 years.
Okay.
And with a forward PE of 18, it might seem fairly valued at first glance.
Yeah. But there's a twist, isn't there?
There is.
Something that could potentially make them even more valuable.
Gartner predicts that AI PCs will make up a whopping 43% of PC shipments in 2025.
That's a huge jump from just 17% this year.
Exactly. And this raises an important question.
What's that?
Could Logitech's enterprise push, combined with the AI PC boom, lead to even stronger earnings than analysts are currently predicting?
That's definitely something to consider.
Right.
But capturing that market share won't be a walk in the park, will it?
Not necessarily.
Right.
Logitech is going up against some well-established players in the enterprise space.
Yeah.
To really succeed, they'll need to offer something unique, something that sets them apart from the competition.
And we can't forget about those pesky macroeconomic factors either.
Oh, of course.
Inflation, rising interest rates, geopolitical uncertainty. All of those things can affect consumer spending and business investment,
Right.
which ultimately affects demand for tech products.
It's a complex landscape, that's for sure.
Yeah.
But the potential is definitely there for both of these companies.
For sure.
Yeah, it really is. And what's particularly interesting is how both Dell and Logitech are capitalizing on this wave of AI integration. But there's a flip side to consider, too.
You're talking about the potential risks if things don't go according to plan.
Exactly.
Yeah.
Both companies are banking on specific trends in the tech industry. And if those trends shift, it could have a significant impact on their projections.
For Dell, it's all about the continued growth of the AI server market.
Right.
If that growth slows down or if competition heats up even more, it could put a dent in their earnings estimates.
Right. And with Logitech, a lot of their optimism hinges on the performance of the PC market,
Yeah,
which has historically been pretty cyclical.
sure.
If the demand for AI PCs doesn't materialize as Gartner predicts,
Right.
or if the overall PC market takes a downturn, Logitech could feel the squeeze.
So it's not all sunshine and roses.
Right.
It sounds like both companies are walking a bit of a tightrope,
Yeah,
balancing these exciting growth opportunities with some very real risks and uncertainties.
that's a great way to put it. And that's why it's so important to approach these investment opportunities with a balanced perspective.
I see.
Acknowledge the potential upside, but don't overlook the potential downsides.
So for someone who's intrigued by these companies, what are some red flags or headwinds they should be watching for?
Well, for Dell, competition is a huge factor.
Yep.
They're up against some real heavyweights in the server market. If companies like Hewlett-Packard Enterprise and Lenovo start gaining market share, or if they undercut Dell on pricing, it could really squeeze Dell's profit margins.
And on the PC side, Dell is facing constant pressure from companies like Apple. Plus, there's always the possibility of supply chain disruptions like we saw with the global semiconductor shortage a few years ago.
Those are all valid concerns.
Yeah.
And for Logitech, their expansion into the enterprise market is a key part of their growth strategy, but it's not a slam dunk.
Right.
They're going up against some established players in that space.
It's almost like they need to convince companies to switch from familiar brands they've been using for years.
Yeah.
That's a tough sell.
It is.
Yeah.
And Logitech will also need to carefully navigate the macroeconomic environment.
Right.
Inflation, interest rates, geopolitical uncertainty, all of those things can influence consumer spending and business investment, which ultimately affects demand for tech products.
It's a lot to take in, but that's the whole point of these deep dives, right?
So,
To get a more comprehensive understanding of the potential and the risks before making any investment decisions.
Exactly. We're just scratching the surface here.
Right.
Our goal isn't to tell you what to do, but to equip you with the information and insights you need to make informed decisions that align with your own investment goals and risk tolerance.
So with that in mind, let's step back from these specific companies for a moment and explore some broader trends in the tech industry that could influence their future performance and maybe even uncover some other investment opportunities along the way.
Sounds good to me. What's caught your attention?
Well, one thing that really stands out is this convergence of AI and other technologies.
Yeah.
It seems like AI is being integrated into everything these days, from smartphones and PCs to cars and healthcare devices.
It's really remarkable. And it's not just about AI companies themselves.
Right.
It's about the companies that provide the infrastructure, the software, the components that make these AI-enabled devices and services possible.
So it's like a ripple effect across the entire tech ecosystem.
Exactly. Savvy investors are looking beyond the AI companies themselves and considering the companies that are essential to the AI ecosystem.
Like the companies that make the semiconductors that power AI processing.
Yeah.
Or the cloud computing platforms that host AI applications.
Right.
Even cybersecurity is becoming increasingly important as AI systems need protection from attacks.
Those are all areas where we could see continued growth and investment in the coming years. And it's not just about understanding the present, it's about anticipating the future.
What's the next big thing after AI? What emerging technologies are on the horizon that could disrupt the status quo? That's the million-dollar question.
It is.
Yeah.
And while we don't have a crystal ball, we can certainly look for clues. There's a lot of buzz around quantum computing, for instance. It has the potential to completely revolutionize fields like drug discovery materials, science, and financial modeling.
And let's not forget about the metaverse, virtual reality, augmented reality.
Right.
The lines between our digital and physical worlds are blurring more and more each day.
Absolutely. These are all areas ripe for innovation and investment. And as these new technologies mature, they're likely to create new opportunities and challenges for companies like Dell and Logitech.
For Dell, it's all about staying ahead of the curve in terms of infrastructure and hardware.
Right.
Can they provide the computing power and solutions needed to support these next-generation technologies?
And for Logitech, it's about adapting their peripherals and software to meet the evolving needs of users in these new digital environments.
It's definitely an exciting and slightly overwhelming time to be following the tech industry. And things are changing so rapidly, and it's all interconnected in such complex ways.
It's a complex web, that's for sure. But with careful analysis and a bit of foresight, I think there are definitely opportunities to be found.
It really is a fascinating time to be watching this space. Okay, so we've talked about Dell and Logitech, their potential, their risks, and these broader trends shaping the tech landscape. Where do we go from here?
Well, I think it's important to remember that this deep dive is just a snapshot in time.
Right.
The tech world is constantly in motion.
Yeah.
So what seems promising today could face new challenges tomorrow.
So how should our listeners be thinking about all of this information?
I think the key takeaway here is to be an active and engaged investor. Don't just blindly follow recommendations or chase the latest fads. Do your own research, stay informed about industry developments, and really think critically about the potential risks and rewards.
And remember, investing is a marathon, not a sprint.
Right.
Patience, discipline, and a long-term perspective are so important.
Well said. It's all about being curious, staying informed, and never stopping learning.
Speaking of learning, there's one more thing I wanted to touch on that wasn't explicitly mentioned in the Motley article. It's something that's becoming increasingly important to investors: sustainability.
Yes. More and more investors are incorporating environmental, social, and governance, or ESG principles into their decision-making.
Right.
They're looking for companies that are committed to reducing their environmental impact, promoting ethical business practices, and fostering diversity and inclusion.
So how do Dell and Logitech measure up in terms of sustainability?
That's a great question, and it's definitely something worth exploring. You can dig into their ESG reports, see what initiatives they have in place, and compare their performance to industry benchmarks.
It's like another layer of analysis, almost like a deep dive within our deep dive.
Exactly. And it could be a key differentiator in the long run.
Yeah.
Consumers and investors are becoming more and more conscious of these issues. Companies that are lagging behind on sustainability might face some real headwinds down the road.
So we've covered a lot of ground in this deep dive. We've analyzed Dell and Logitech, explored their potential and their risks, discussed a broader trends shaping the tech industry, and even touched on the importance of sustainability.
It's been a really comprehensive exploration, and I hope it's given our listeners some valuable food for thought.
I always say knowledge is power, and in the world of investing, that's definitely true. The more you know, the better equipped you are to make informed decisions.
And remember, investing is a journey, not a destination. It's about continuous learning, adapting to new information, and staying ahead of the curve.
So as we wrap up this deep dive, I want to leave you with one final thought.
Right.
We focused on two specific companies today, but the real takeaway is the process we've used. The critical thinking, the analysis of trends, the consideration of multiple perspectives. These are the tools that will serve you well in any investment decision, regardless of the specific companies involved.
It's about developing a framework for evaluating opportunities, identifying potential risks, and ultimately making choices that align with your own financial goals and values.
And that's something you can take with you long after this deep dive is over.
For sure.
So keep learning, keep exploring, and happy investing.